Hi, I'm Charlene Laney, co-founder of Newmaker Financial and certified financial planner professional. In this video, we will be talking about your three main options for retirement plans as a self-employed person. Now, the three options, and of course, you do have more options than this, but to simplify it, the three main ones that people go for are either a SEP IRA as number one, number two, a simple IRA, or even a 401k or qualified plan or another defined contribution plan of some sort. Now, let's get into it. First of all is the SEP IRA. Now, SEP stands for Simplified Employer Pension Plan. This IRA can be extremely impactful for single member LLCs. Not to say that you can't use it if you do have employees, but there are just some rules around the SEP IRA that make it perhaps not the best option for you if you are a business owner that has W-2 employees. So what I like about the SEP IRA is it is extremely easy to set up. Often the financial institution that you set up your SEP IRA with will do the regulatory and filing requirements on your behalf. So very simple, kind of quick and dirty version of setting up a retirement plan for you. And the kicker and the best thing really about the SEP IRA is that it allows you to put away up to 25% of your salary or what you're paying yourself for that tax year on a pre-tax basis. So just like with a traditional IRA where if you're putting away $6,500 for the year into your IRA on a pre-tax basis, often for most folks, that is going to be a above the line deduction for you on your reportable income for the year. Of course, you'll want to check with a tax advisor. That's not applicable for everyone at all income levels. But with the SEP IRA, that is likely going to be the case for you. And the reason, by the way, that the percentage is so high for what you can put away into a SEP IRA is because as a self-employed person, you recognize that, at least from a tax standpoint, you're paying for taxes on both the employer side as well as the employee side. That's why our taxes tend to be so much higher. Well, just like that, with a SEP IRA, you're able to put away much, much more into that account. But just to be clear, for accuracy's sake, with SEP IRAs, all of the contributions that are made to this type of plan are employer contributions. Okay, which brings us to number two, a simple IRA. And just like its namesake says, it is a simple plan to set up. So just like with the SEP IRA, very easy to establish these plans. The financial institution that you're working with will often do all of the IRS related paperwork that's necessary because they are very simple forms. But simple IRAs tend to work really well for small businesses with a few or more W-2 employees. They do allow, unlike the SEP IRA, for the employer and the employee to make contributions. And the way that you set it up, first off, there is a maximum for how much your employees can put into there, and it's not quite as much as what they could do for 401ks. In the tax year of 2023, for example, $15,500 is the most that can be put into these plans from the employee side. But as employer, you can establish a match for your employees too. On the simple IRA, you can do as much as 3% of their eligible compensation, or you can designate a lower percentage if you choose, but nothing lower than 1%. What's also nice with the SEP IRAs is that as employer, you can choose to reap the tax benefits potentially by putting in non-elective contributions into simple IRAs for your employees. And what that means is that rather than waiting to see if they're going to participate in this type of plan and whether they're going to put their own money from their salary into it, and then determining from there whether or not they're getting the match. With non-elective contributions, you can simply put in those contributions into a simple IRA on their behalf, and they don't even need to be participating in the plan. So that is another neat little option with the simple IRAs. Now, the third option for you as a self-employed person with a small business, and as I mentioned, there are more options than this. It is much more complex. I promise I'll do more videos on it. But as qualified plans, most people know of a 401k plan. And these are things that you can set up. Sometimes they're called defined contribution plans, by the way. You may see them called that on various different IRS materials. But yes, 401ks tend to be suitable for businesses with a high and a growing revenue with multiple different employees that are continuing to be added. The downside, I'll just start with the bad for this one. The downside to 401ks is that because they are governed by the laws of ERISA, which is, of course, one of those great government acronyms we have to work with. These are a set of laws that are established for qualified plans by the Department of Labor. As a result, they do have a lot of regulatory requirements and filing requirements that need to be met on an annual basis. And because of those requirements and making sure that you remain within compliance for your retirement plan for your employees, often you do need to hire a few different parties to help you manage the plan, make sure that you are meeting the standards, and that can get a little bit expensive, which is why I initially said that it tends to be for businesses that have a high revenue, that are continuing to grow their revenue, continuing to grow their staff, and particularly for businesses too that want to increase the retention of their employees. Employees these days, they are looking for benefits, and 401ks are one of the main things that they look for. They may not know what a SEP IRA is, they may not know what a simple IRA is and what the benefits are for them there, but they are going to recognize what a 401k is. So that is one of the benefits that you get with the 401k to offset the downside and the regulatory requirements. One other piece of the 401k that you may consider as a positive as you're looking at your different options is the fact that there's a lot of flexibility with 401ks for putting money away for tax benefits for you and your business. And then on the employee side, it's a lot more beneficial there too, because they can set aside much more money every year on a pre-tax basis. So these are the basic things I wanted to share with you about SEP IRAs, simple IRAs, and 401ks as the three primary options that I see with small business owners for their employee retirement plans. I hope this has been helpful. Let me know if you have more questions on it. And if you haven't yet, like, share, and subscribe. Thanks, guys. We'll see you next week.